Good morning and welcome to the Bulls, Bears, and the Bell Morning Edition. We are kicking off a really special deep dive today. It feels like we're standing right on the edge of something significant in the market. If you're trying to understand the currents, pulling and pushing things around, especially with a big afternoon ahead, well, you're definitely in the right place.
Our sources, they're painting this picture of a market in tense equilibrium, almost like a wound-up spring, right? It's not quiet because nothing's happening. It's quiet because everyone seems to be holding their breath. So what exactly is everyone waiting for? And what are these powerful forces shaping this pre-market stillness?
Yeah, what's really fascinating here, it isn't just about one single company's report, though that's huge. It's more about a convergence, significant macro political stuff, economic cross-currents, all kind of leading up to this one event later today. And this dynamic, it creates a market condition that's just right for dramatic shifts. You really have to look deeper into the underlying signal to get what today's strategic imperative really is for you, the investor.
Okay, let's unpack that then. What's making today such a day of risk management and positional readiness? We'll dig into the U.S. market's quiet start, those unexpected political tremors around the Fed, new tariffs hitting global trade, and yeah, of course, the one company everyone's watching, the main catalyst. So, looking at the U.S. index futures this morning, I mean, on the surface, it looks pretty calm, doesn't it? But like you said, our sources are saying this quietude isn't peaceful at all. It's hiding some intense underlying tension. What's the real story behind these small moves?
Well, the muted nature of these declines, that's actually the most critical data point for you this morning. Sure, the Dow, S&P 500, NASDAQ 100, E-minis, those futures contracts are showing minor losses. Maybe near 0.17% for the Dow, near 0.12% S&P, near 0.13% NASDAQ 100. But this isn't a market just drifting lower because there's no news. No, this is a deliberate market-wide refusal to place big bets. Less equilibrium, more like a kind of paralysis.
Paralysis. Wow, that's a strong word for a market that just looks kind of flat. How is this inaction different? What makes it so significant compared to, other slow periods?
It suggests that current equity valuations, especially in tech, are basically conditional,
Uh,
highly conditional, on what? On NVIDIA's Q2 earnings report, and this is critical, its forward guidance after the bell. This one single event, it's seen universally as a potential inflection point. For the whole AI-driven rally we've had in 2025, the low volume, the tight trading ranges you're seeing, that's the big money, institutional investors moving to the sidelines, getting ready. They're preparing for potentially high volatility. And when that much capital waits for the exact same signal, well, a move that follows can be greatly exaggerated.
So the quieter now, the louder later. That kind of flips the usual thinking on its head, doesn't it?
Exactly. It's like potential energy building up.
Okay, so beyond NVIDIA, our sources point to two other big macro-political factors stirring the pot here, adding to the tension. First, the Federal Reserve. We're hearing about an unprecedented political challenge to its independence. What's going on there? Why the nerves?
Yeah, that's a significant development. President Trump moving to oust Federal Reserve Governor Lisa Cook. Now, she's contesting the legality, says she won't step down, but just the attempt itself, it raises fundamental questions about the central bank's political independence. And investors see that as a major overreach, something that could politicize monetary policy, and that could erode global confidence in U.S. assets down the line. It really starts to show maybe how much fragility we might be building into the system when these core institutions face challenges like this.
Okay, that sounds like a clear negative for long-term confidence. Definitely. But you mentioned this paradox. What was the immediate market reaction? How are they weighing this?
Well, initially it was a classic flight to safety move. The dollar weakened a bit, gold rallied. Pretty standard. But here's where it gets really interesting for you. The market sees this paradox. Yes, the long-term institutional risk is clear, but a Fed that's maybe more susceptible to political pressure, the market sees that as potentially more likely to cut interest rates sooner. And that narrative, easier money, that's been a primary driver of the equity rally this year. It's boosted the implied probability of a September rate cut to, 87% now? So you, the investor, you face this dilemma. Chase the short-term gain from a possibly more dovish Fed, knowing that long-term this politicization could undermine the very stability that U.S. assets rely on. It's like a short-term sugar rush with potential long-term risks baked in.
The fascinating tug of war there at the Fed definitely adds complexity. Now let's shift gears slightly. Global trade, we're seeing new U.S. tariffs against India. How does this fit into the market picture today? What are the immediate ripples?
Right, adding another layer. The Trump administration has slapped an additional 25% tariff on India, effective today, August 27th. The reason given: New Delhi's continued buying of Russian oil. The most immediate impact you're seeing is in energy markets. Crude oil prices, both WTI and Brent, they're trading lower. Why? Fears these tariffs will make Indian imports just too expensive, hitting demand. We're hearing Indian officials warning U.S. orders could drop significantly, maybe 20–30%. And thinking about NVIDIA again, this adds another risk to their forward guidance, particularly on demand from major Asian markets.
Wow, 20–30%. That's a potentially huge hit to demand. It feels like a game of Jenga sometimes. You pull one block, these tariffs. Could it destabilize the whole global trade setup? What are the broader implications beyond just oil? Does this signal a bigger shift?
It certainly signals a willingness by the U.S. to use these secondary sanctions, penalizing others for dealing with sanctioned nations, and trade policy itself as pretty potent foreign policy tools. This definitely raises the risk of retaliation from India or others, and it could signal a new, maybe more unpredictable phase in global trade relations, potentially leading towards more fragmented trade blocs. Not good for globalization. For multinational corporations, this just adds another layer of complexity: supply chains, geopolitical risk assessment. It could dampen corporate investment, maybe slow global growth. It's another factor contributing to that overall market fragility we talked about.
Okay, so with these U.S. tensions political at the Fed, trade with India, how are global markets reacting? Is it one unified story out there, or is it more fragmented? Like you said, a tale of two tapes.
Oh, definitely fragmented. Very much a mixed picture. In Asia, for instance, tech shares actually advanced. They were buoyed by that NVIDIA optimism, believe it or not.
Okay.
You saw Chinese AI firm Cambricon Technologies surge to a record high. Japan's Nikon jumped, 21%? Impressive. And that lifted regional benchmarks like Japan's Nikkei 225 up maybe 0.3%, South Korea's Kospi up 0.2%. So the AI narrative still has a powerful pull globally.
But it's not all sunshine and AI optimism across the board, right? Where are the headwinds showing up?
Precisely. Broader Chinese indices actually fell sharply. Hong Kong's Hang Seng was down 1.3%. Mainland Shanghai Composite dropped 1.8%. So that split, it shows you that while the AI story is strong, it's not enough on its own to offset those persistent worries about the Chinese economy or the ongoing geopolitical friction, especially the U.S.-China tech tensions we mentioned. Over in Europe, stocks are modestly higher. Stock 600 up maybe 0.10, 0.3%, again, led by semiconductor makers. But the gains are capped. You've got local political issues, like in France. The CAC 40 is underperforming because of Prime Minister Bayrou's confidence vote tied to budget plans. So yeah, the AI tide lifts some boats, but domestic issues, geopolitics, they're definitely anchoring others down.
It really sounds like the whole global market is holding its breath. Some parts leaning into tech hope, others dealing with their own problems, all waiting for that one big event later today. What about the broader economic data? What kind of foundation are we standing on? Is it shaky? Solid? The foundation looks rather fragile, honestly. The macroeconomic backdrop isn't exactly strong. The IMF, for example, describes the global economy as showing tenuous resilience, that's their term, amid persistent uncertainty. They project 3.0% growth for 2025, but they highlight big risks from inflation, geopolitics. Here in the U.S., recent consumer confidence actually dipped a bit. Worries about job availability and 12-month inflation expectations ticked up to 6.2%. That contrasts a bit with some more resilient data from July, like personal income and consumption being up 0.3%. So the market is really sensitive to shocks right now, especially with key data coming later this week, Q2 GDP, and crucially, the PCE price index. That's the Fed's preferred inflation gauge. If that comes in hot, it could seriously disrupt that whole rate cut narrative propping things up, reveal more fragility.
Okay, so stocks are tense. The macro picture is fragile. What about other asset classes? Are they telling the same story, echoing this caution?
Absolutely. The cross-asset signals are remarkably consistent with caution, and they're telling you a complex story. Let's start with U.S. Treasuries. The benchmark 10-year yield, it's trading around 4.28%, up just a bit. Yields across the curve are firming up. The 2-year's at 3.66%, the 30-year at 4.92%, and the yield curve is still inverted. That's your classic recessionary signal, still flashing. Now, the slight rise in long-term yields today, despite the Fed turmoil, which you'd normally think would push yields lower that suggests something interesting, it suggests the bond market is pricing in a higher long-term risk premium. Maybe fears about fiscal discipline or erosion of the Fed's inflation-fighting credibility. It underscores that long-term concern.
That's a powerful signal from the bond market, yeah. Very nuanced. And what about commodities, oil and gold? Same story of uncertainty, or are they diverging?
They're clearly reflecting both the geopolitical tension and the growth concerns. Crude oil, WTI is around $63.2, $63.15. Brent, $66.46, $67.13. Both down about 0.3%. The U.S.-India tariffs, that's the main driver there. threatening demand from a key consumer. Gold, on the other hand, is trading around, say, $3,377, $3,382 an ounce. It's slightly down today, but it's basically consolidating near two-week highs. It rallied earlier on the Fed news, appealing as that safe haven asset. So as divergence oiled down on growth fears, gold holding strong due to instability. That's a classic risk-off signal. It tells you investors are de-risking. They're favoring protection over expansion right now, tightening that spring even more.
So it sounds like everyone's pulling back, looking for safety where they can find it. How's the U.S. dollar doing in all this? It's often seen as the ultimate safe haven. Is it benefiting?
Well, the dollar index, the DXY, it's kind of caught in that tug-of-war we talked about. It's trading slightly higher, maybe 0.2%. On one hand, the political uncertainty around the Fed. Fundamentally, that's dollar negative. It hints at potentially earlier, maybe politically motivated rate cuts. But on the other hand, in times of global stress, geopolitical friction, the dollar usually benefits. It's the world's main reserve currency. So for now, that safe haven impulse seems to be just slightly outweighing the monetary policy worries. Watching the dollar's direction for the rest of the day will be a really good real-time indicator of overall risk appetite. Which force is winning out?
All right, we've circled back. The elephant in the room, NVIDIA. Our sources are calling it a market-defining event, a talisman for the AI trade. Beyond just the headline numbers, what exactly are we looking for from their Q2 earnings after the bell?
This really is it. NVIDIA has just become the undisputed bellwether for this entire AI investment theme. Full stop.
Yeah, the stock's up about 0.5% in pre-market. Analysts generally expect strong results. Consensus EPS forecast is around 98 cents in share. Sales growth projected over 50% this year. Strong numbers expected. But the crucial part, what you really need to watch for, is management's commentary, the forward guidance. Not just the top-line numbers, but really two key issues within that guidance.
Okay, what are those two critical pieces, the things that will really move the needle, not just for NVIDIA, but for the whole market, the AI story? First, their outlook for demand in China, especially given those tough U.S. export restrictions we keep mentioning. That's going to give us a vital read on the real-world impact of U.S.-China tech tensions. How resilient is NVIDIA's demand despite that? Second, any commentary on their supply chain and production capacity. That'll be closely scrutinized. Are there bottlenecks? Is the growth cycle maybe maturing? The tone of this forward guidance, that's likely going to determine whether the market's AI euphoria continues, or if we're heading for a period of consolidation, maybe some valuation re-rating. It really is the central piece of the puzzle. It'll either release that coiled spring or tighten it further.
Talk about high stakes. Wow. But NVIDIA isn't the only company moving today, right? What are some other individual stocks catching attention in this otherwise quiet pre-market?
Yeah, despite the broad quiet, there are some significant individual movers. On the upside, you've got Interactive Brokers, IBKR, up around 4%. That's on news. It's joining the S&P 500, which forces passive funds to buy it. Talon Energy, TLN, also up about 4% for similar reasons, joining the S&P Midcap 400. AMD, Advanced Micro Devices, is up 2.5% on an analyst upgrade. And Eli Lilly, LLY, is up 2.4%. They had positive trial data for their experimental weight loss pill or for Glipron. On the downside, Palantir, PLTR, is down about 0.6%, continuing weakness after an insider sold stock. A couple of biotechs, Maris NV, that's MRUS, and Nuvalent Inc., NUVL, both down around 4%. Probably just profit-taking after some good runs recently.
And just quickly, for listeners looking beyond the NVIDIA show tonight, what's on the broader earnings calendar?
Sure. Before the market opens, we've got Royal Bank of Canada, RY, Williams-Sonoma, WSM, Kohl's, KSS, it's one to watch for the department store sector, and JM Smucker, SJM. Then after the close, besides NVIDIA, keep an eye out for cybersecurity firm CrowdStrike, CRWD, data warehousing company Snowflake, SNOW, and the hardware maker HPQ. So yeah, still a busy earnings day, even if NVIDIA is stealing the spotlight.
So as we start to wrap up this deep dive, how should listeners be thinking about today's trading session? Given all these converging forces, this underlying fragility we've discussed, what's the approach?
Look, the U.S. trading session today, Wednesday, August 27th, it's really best viewed as a prelude, a warm-up act. It's a day for information gathering and for pronounced risk aversion. You should probably expect low trading volumes, tight ranges for the major indices, and a really heightened sensitivity to any headlines, especially about the Fed's independence or those U.S.-India trade relations. Directional conviction. Unlikely to really show up until after 4:00 p.m. Eastern.
And NVIDIA really is the key variable. With that potential binary effect on the market, as you put it, it sounds like so much is riding on their shoulders, especially given this tense macro backdrop.
Precisely. It's pretty stark. If NVIDIA delivers strong results and confident forward guidance, especially on China demand, supply chains, it could validate the whole AI narrative. That could trigger a significant relief rally. unleash some of that pent-up market energy we talked about.
Yeah.
However, a miss on revenue, or maybe more importantly, weak or cautious forward guidance, that could prick the AI bubble. And that would likely lead to a sharp, broad-based sell-off in tech and a wider risk-off move across the whole market, because the main pillar of the 2025 rally would suddenly look shaky. That underlying fragility would be exposed.
You're definitely not a day for making aggressive moves then. More about observation and getting ready.
No, absolutely not. Today is a day for capital preservation and preparation. That's the key. The prudent strategy is to monitor these key drivers, macro, individual stocks, while you prepare for a potential shift. A shift in volatility, a shift in market direction, all depending on NVIDIA's report. The feeling out there is extreme caution. It's not crisis mode, not yet. But the potential for caution to morph into crisis, that really hinges entirely on the data we get after today's close.
What a fascinating and, tense day ahead from this quiet pre-market, the political stuff around the Fed, new trade tariffs, and then the huge NVIDIA report. The market really is like that wound-up spring, just waiting. We've explored how Fed independence, global trade, economic resilience, and just one company's outlook are all tangled together in this complex dance, revealing these moments of fragility.
Yeah, and if we connect this to the bigger picture, it highlights something crucial for you, the listener. It shows how concentrated market sentiment has become and the, frankly, outsized influence a single company or even a single political action can have on global financial stability right now. It really encourages us all to constantly question what's truly underpinning market valuations, especially when so much seems to hinge on just a few key points.
So what does this all mean for you as you navigate this landscape? It means staying informed, understanding these interconnected forces, and recognizing that even when things seem quiet, the potential for big moves is always there. As you go through the trading day today, maybe consider this. In a market that's leaning so heavily on just a few bellwethers and is so susceptible to these diverse geopolitical shifts, how robust is the system's foundation, really? And how prepared are you for that spring to finally uncoil? Thank you for joining us for this deep dive. Stay tuned, stay informed, and of course, we'll be here to help you unpack whatever happens next.